good afternoon, everybody. Happy Friday, and welcome to the Real Life Real Estate Investing Show, where we guide you through creating generational wealth. My name is Hector Hernandez. I'm a real estate fund manager and wealth building coach here on reallifetrading.com. With me today, as always, is my co-host, my buddy, my pal, Mr. Luis Alejandro Lopez. What you got on the docket for today, Luis?
Good afternoon, everyone. My name is Luis Alejandro Lopez. I'm a real estate investing coach here with Real Life Trading, and we have you a really nice update show that we haven't done in a while. We're gonna be looking into what's going on. We finally got the rate to stop, the Fed rate increase to stop. They paused for a little while. We don't really know what's going on. So let's have a look at what's that bringing to the market. We've been hearing that the market is going to crash. We've been hearing that the market is going to explode. We've been hearing the market is great. So let's look into that today. All right. So first of all, disclosures. We're two guys on the internet. We kind of think we know what we're talking about. Sometimes you hear us and we have really good things to say. However, you are the guys doing the investment. If you're going to use our resources or ideas or anything, at the end is you guys making the decision. You guys are signing the dotted line. You guys are wiring the money. So please be careful. If something sounds too good to be true, it's probably too good to be true. All right. Make sure that you see what you're looking for. Make sure that you know what you're getting yourselves into. If you don't know, if you have any questions, please reach out. We are here. That's the reason over here. You can reach out to us through Slack, through email, through what else?
Smoke signals. We do
smoke
answer
signals.
those too.
Yeah, no, there's no smoke today. It's raining. But yeah, reach out to us. We can go through whatever deal that you guys get your hands into and look at the numbers and it makes sense or doesn't make sense. And go from there. Please. It's really easy to lose money in real estate. It's really easy to make money in real estate. However, real estate is very slow. If you guys get yourself in trouble, it's gonna take a while to get out of that trouble. It's not like clicking and just getting out of that trade, and that's it. You lose an hour. It's not this. Takes a while. So as for now, let's use this presentation as entertainment and education. Again, if you come into something, reach out to us. We're here. All right.
Man, you moved around when I was doing the little circle, but it's all good. You
That's
forgot the
it.
part that we are just two random handsome dudes on the internet. Just in case that disclosure needs to be said.
So if anything, remember, you wanted to reach to us, we're using the QR codes. You have our information here. The QR codes are going to take you to our email, to our phone numbers, to Twitters, to our Instagrams, to whatever else you want. So again, reach out. Oops. If you have any deals as well, if you want to talk about it, if you want to, you have money to invest, if something comes your way, again, reach out. We're looking also for deals. We're looking also for, whatever we can get.
It goes both ways. A lot of you guys have reached out, asked if you have deals, can you bring them to us for us to partner? Or a lot of you, an even larger amount of you, have some capital laying around. You don't necessarily want to invest it yourself, and you've asked, hey, how do we get involved in your deals? So this is one way to start. It starts by reaching out to us, building a relationship with us, and then we'll have you on the list for either receiving or sending deals to. And that's always the first way to start. This real estate is a relationship game, is a team sport. We tell you that all the time. We partner with other people, we partner with each other, and we always partner with investors as well. So reach out, let's get talking, and let's get you on the way to making some passive income in real estate.
Perfect. All right. So what are we?
This is my favorite slide, bro. The whole deck. Jim Carrey's face.
That's usually us. And then we go down the rabbit hole and we talk real estate for hours. All right. This is you.
Okay, so ultimate partnering. Yet another question that I've gotten very often from this community is, hey, how do I find people to partner with in real estate? You guys mentioned it's a team sport all the time. Well, my friends over at RE Mentor, which is led by David Lindahl, basically the godfather of multifamily real estate. He wrote the book Multifamily Millions. and a few other real estate books. But essentially, he puts this event together every year. It's called Ultimate Partnering, literally because people go there and they find partners. They find active operators like Lewis and myself that they can invest with, and they also find passive investors. If you're an active investor and you're looking for investors to invest in your deals, you can also find us in this event. They've been gracious enough to extend a discount to anybody within my network. So if you click that link, you type in my last name, Hernandez, you'll get an extra $200 off the ticket. I don't really know how long they're going to keep that special going, but I do know that the event is on September 10th. I've already got my ticket. I got my flight and I got my hotel. I will be on my way. I hope to see some of you guys there so we can hang out and have some fun and meet some cool, interesting people. This is all sorts of real estate investor, but heavily dominated by multifamily investors.
All right. And the QR code here takes you where?
The QR code takes you right to the event information, gives you all the dates, and the ability to buy it. And then at the end, you just punch in that promo code and it should give you an extra $200 off until they're running that special. If you're catching this on YouTube a long time from now, sorry if the special is over. I don't really know how long they're going to let it go for.
All right. So let's talk about what's going on.
Actually, before we go too far, bro, another piece of announcement is RLT is closed Monday and Tuesday next week. We will reiterate it at the end of the show, but if you're here live, remember that the rooms will be closed Monday and Tuesday for 4th of July, Independence Day.
Yes, and I'll see you guys on Wednesday, full blown new month, new hours, new everything.
That's gonna be a crazy gap on Wednesday, bro.
Yeah.
Can you imagine? We just take out all the action from this week. It just boom, big old gap down. I'm not asking for a bear market. Please, no hate emails, no hate emails. I know everybody's long right now, but I'm just saying it would be fun.
It will be fun. Yeah, sure, it will be fun. Yeah,
I'm not saying I won't lose a couple
hours,
but
be fun too. I'm not gonna say anything.
All right, bro. Sorry, go ahead. Let's get going on what you got.
So what happened? When was a market closed on? I think market it's open on Monday, half a day, and it's closed for sure on Tuesday. So I think it closes at 1 p.m. And for sure the volume is gonna be really low. But hey, if you find a gap or something, why not? If you're in front of the computer, take your opportunity. But it's closing at 1 p.m.
Yep, according to Google, it does close early at 1 p.m.
Mm-hmm.
And yeah, it's usually pretty terrible. It's a pretty terrible volume on the day before holidays. And if you're gonna do anything, I usually will trade like maybe the first half hour to an hour, and then that's it. I'm done. If that, if I'm lucky.
Exactly. All right. So, Mr. Powell, what happened? Do you remember? That was what, 2 weeks ago? We don't even remember 2 weeks ago.
It was shortly ago. They paused, right?
The Fed decided to stop the increases on rates. Okay. However, that doesn't mean that you see every peak here was being one of the increases. They increase the base rate, and then the base rate kind of fluctuates depending on the economy, pretty much. Okay. But every time that they come, they increase a quarter point, a quarter point, a quarter point, a quarter point. That's what we've been doing for a long while. They finally decided to stop because they say that they are taking care of the inflation. All right. So
my grocery bill hasn't gone down at all, bro. What about yours?
Correct. But it has not gone up anymore. Remember, the inflation means that the prices keep turning up. Now they're high, but they're not coming down.
I guess, I guess.
Deflation, yeah.
I'm still paying $30 a gallon of milk, but it hasn't gone to 35. So
CD's saying the hairs is higher and higher. It's some things are out of control. But for the most part, they say the inflation is under control. We'll see. They say that they might resume increases later on this year, depending on what's going on. But for now, that causes all the interest rate. Every interest rate that we use in the country is based out of the Fed. So not everything, but most of them. So based on the Fed,
most of the retail stuff, most of the retail stuff is based on
most of the retail stuff. Okay, it comes from the Fed. So let me look at the mortgage rates. So the mortgage rates. Sorry. So what happened with the Fed? It's created. This is the chart. I was looking for the Fed fund here. This is the Fed fund, and let's for 5 years. You see how they started all the increases. They finally decide to stop. Okay, they finally decide to stop. Let's make this.
That's what I call parabolic, bro.
Yeah,
That
they don't
looks
have
like
the
the
data for
Nvidia
June.
chart. Tell me that doesn't look like Nvidia right there, man.
Everything that goes up has to come down. Gravity's gonna take it down at some point once the prices stabilize, I think. All right, but then I'm not there, so I don't know what I'm talking about. However, so that caused the mortgage rates every time there's a increase, the mortgage rates go up. Okay, so the mortgage rates, what happen? They go and increase as soon as the points come on and see, then the banks, which basically the business is to make money out of you, if nobody's applying for mortgages, then they start reducing the rate,
Exactly.
until people start applying for mortgages and they're playing that game. You go too a little bit too high, people stop applying for mortgages. They go a little low, everybody start applying for mortgages. So they are trying to play that little game where they're trying to make as much money of you as they can. Plus, they have to keep in mind that if they give you a mortgage, let's say at 6%, and the Fed increases the rate in another month for another 25 points, 1/4 a point, then they're gonna be on the losing game of that mortgage. Okay, because it's gonna cost them more money to recoup that money. So that's all. They also build a buffer there.
Let's go back to that Fred real quick, bro. Because Cindy does make a good point, right? Compared to the 70s,
this
this
is
is
not bad at all.
not really that bad.
Compared to 2005.
Let's go max.
Here, this is 14 or 10
No,
years.
go max. You gotta go max, yeah.
Yeah, no, I was thinking 2005. That was a week ago.
Yep, look, the Fed funds was like right around where we're at now, maybe even a little bit higher.
I remember having mortgages 6 and some percent in 2005, 2006, when the first, that big boom, and that big boom also happened. Remember the big real estate crash?
Yep.
This is what brought it up. Okay.
Yeah, I remember my parents buying a house sometime around here, and we had about a 6 and change rate, if I remember correctly. It was
the difference though is that you had a 6% here, and I'm sure the house, what, 150, 130, same house moved down in time is what, $400,000-$500,000.
Dude, it was under 100, bro. I don't remember. It was like 98 grand or something. That house right now is probably like close to 600K, $500,000, between 500 to 600K for sure. So it is it's a major difference in what people are paying. That's what's causing the affordability issues, which is what we've been talking about. But Cindy is right. Compared to the 70s and the 80s, this is nothing, guys. It could get a lot worse. I talk to the old timers in the business all the time, and they're like, oh, this thing could go on for 10 years. You young bucks don't know anything. And so I am young and I don't know anything, honestly. So I tend to kind of listen when those guys speak. Now, do I think that the country can support this, that our economy can support this? I don't think so. I think we have gotten way too used to the QE stuff, the quantitative easing, and the lower rates. And I think that would just be crippling to the economy. So I don't necessarily see the Fed doing, something crazy like what they did in the 70s. Getting rates, over 10%, 16%. I think that won't happen. I hope that doesn't happen. But if it does happen, just understand one thing, that is like everything else. Yes, prices will come down, but eventually they'll recover. The last thing you ever want to do is panic sell. So as we go through today and we give you the updates, we're just letting you know the data that we're seeing, because we're constantly out there looking at this. This is what we do for a living. This is our business. So we're constantly staying informed, and we try to make decisions with what's coming next, not necessarily what's happening right this instant, because it's already here and there's things that are going to happen. And the people that were buying in 2022 thinking rates were never going to go up because they were focused in that 1 month, they took a beating earlier this year when they were trying to exit. theoretically, us included. Not that we didn't know it was coming, but we got stuck with, that one project that the hurricane ripped the roof off, and now we, are selling it less than we would have last year. Not that we wanted to, but hey, it happened.
It's closing soon. Don't say anything yet.
We can't talk about it yet till the
Don't
check
jinx it.
clears, guys. We ain't gonna talk about it. We'll give
talk
you an
about
update
it.
after
We'll talk
the
about
check
it in 2 weeks.
clears.
Like we send all the pictures and everything. No, don't
Yeah,
talk
yeah,
about
yeah.
it.
We'll do a whole that one requires its own show, dude. That was an epic adventure for sure.
Yeah, the flip that got flipped. All right,
The
so
flip that got flipped, the longest flip I've ever had, but hey, it's all good as long as we
It's
end
all
up in the green.
all right, so rates are gonna be being steady. They're pretty much gonna stay around here, 5.25, 5.20, 5.26, whatever. Okay, the mortgage rates that we saw, they're gonna be lingering around the 6 for at least 3 or 4 months more, unless something really more happens. So they're gonna be steady. One of the reasons why everything they want to slow down is they want to see how the economy reacts. Now, again, how's the affordability of a house? The medium home is $369,000 today. Okay, at 6%, would that put us in a mortgage of about what, $2,400 a month? $2,200 a month, roughly. Okay, now can families support that? Can the country support that? That's the thing that we need to look into. Let's have a look at something here. Other thing that they look into if to making this announcements, it's the unemployment rate. Okay, they technically, remember, I'm not sure you remember, we spoke back in January, February. Basically, the mission of the Fed was to wreck the economy. If everybody's employed and everybody has jobs and everybody's making money, everybody's spending more money. So easy money in the streets, everybody, overheats everything. Everybody's willing to pay more for everything. That's why instead of having, finding deals in the cars, now everybody's paying over sticker price on cars. It's over sticker price, over asking price on houses, et cetera, et cetera. That's why, like Cindy said, now your food bill is unbelievable. I just went to Five Guys, no, that's last week. 3 burgers is almost $60. It's, you need to think about it. Okay, so that's going to happen. The people are going to start thinking about it. It's like, that this is not really worth it anymore, and people are going to start slowing down. But part of the reason why the rate is also doing that is they want to see how this number going to keep going up. Okay, ideally they want the unemployment to be a tick higher. Okay, around here, around 4%, 5 to 4% is the ideally.
Yeah.
Cindy saying used car sales is a good guy for that. Cindy, they're selling used cars for the price of new. That's
True story.
usually the cars used to take a hit depreciation for what, 20-25% as soon as you drove them off the lot. And now go to CarMax. You find the cars for the same price and the same MSRP.
I just did it.
You just got a car.
We just sold my wife's car to Carvana for, it was like $300 or $400 less than what we paid for it like 6 years ago. It's crazy. It didn't have a ton of miles because she didn't put a lot of miles on it, but nevertheless, I was shocked to see the price when they were offering that. I was like, go.
And it was a Jeep. Usually Jeeps don't keep their value unless there's a Wrangler.
Yep. And I was shocked when she told me that number. I was like, hold on, what are we paying for it again? Go. Yes, hurry up, go.
Click it.
I didn't even believe it. The entire time I was waiting for them to show up to the house to pick up the car and try to change the number on me. When they were like, oh, here you go, sign here, here's your check. I was like, hurry up, go cash it. hurry before they cancel.
So yeah, that's what happened. Everybody has
now money. The new car we bought was like crazy much more than it was like a couple years ago too. So I also took it in the face there. Don't get me wrong.
It happens. It's like everything else. But I'm sure that same car, if you try to sell it now, you can sell it for pretty much what you pay for, which is
they're holding pretty well. Same with my F-150, but yeah, it's pretty insane The whole inflation has done a number on a lot of things. And the question is, does it ever come back down, right? I mean, I'm
It
not an
does.
economist and I'm not old enough to have lived through some of those really or periods of really high hyperinflation from many years ago. But from a historical standpoint, the prices on things ever go down? Very rarely.
Mm, yeah, they kind of stay barely. Well, we saw the big dump of the bust in 2009, 2008. I don't foresee that happening now,
Yeah.
but
Yeah.
let's see what the numbers say. Okay. This is according to National Association of Realtors. This is information that I pulled up yesterday. Existing home sales, month to month, they went up. Okay. Now the month to month they went up 0.2%, which is not really that much. Okay. But remember, they go up a little bit also because it's seasonal still rates. The most of the people want to buy properties in April, May, and June. So they're settled down for the new school year. All right. Year to year properties, the volume of sales is 20% down. So we're still having way less transactions, okay, over year to year, 20%. And the median sale price came down 396,100, which is year to year is 3.1%. So meaning last year it was what? Almost 400, 3% of 396.
Yep.
Okay, it was
Yeah,
like
last year
three.
was 3% higher, which is it's not a lot. And this is as of May. There was a
Mhm.
little bit of a bigger pullback towards the end of last year. We all talked about this early in the
Yeah.
year. But then things pop back up as soon as like Lewis said, the banks went fishing, right? For those interest rates. The interest rates had gotten silly in November. And then as the banks kind of went looking for the buyers and the people looking to make those transactions, they came down a little bit. Sure enough, people showed up. So that that kind of brought some balance to the prices again, but it's definitely crept down a little bit. Not as much as I
Well,
know. I know everybody's waiting for the crash. Everybody's like,
yeah,
well,
but look
a
at
big
the
crash.
but look at what we always say. A balanced market, it's 3 months of inventory. Okay. Actually, no, it's 6 months of inventory in the market. So we're still pretty much in a seller's market. Okay. You're gonna see in the next slide that we're still selling properties above asking price. Okay. So what's going on? Same situation. There's less people putting their homes for sale. They're squeezing the availability of the market. Again, if something you cannot find it easy, what happens with the price? Price tend to stay higher. Okay. Instead of having 20 houses to choose from, you only have 5. What's going on? Those 5 prices by 5 houses keep their price up. However, people becoming choosy because we're seeing it in the market where if the house has some kind of problem, people are walking away. Okay. Before used to be like it was like a free for all, and 50 people showing up for an open house. That's not happening no more. Okay. There's still people showing up for open houses, 10, 15 people. I mean, but the craziness of last year, last year, it's not there. Okay. Things taking a little bit longer to sell. Things need to be pristine and beautiful in order to sell good. But those things that are pristine and beautiful are still selling above asking price.
Yep. And this is kind of what we've been talking about, right? This is what we shared with you guys in
This
when the
one,
market starts to build equilibrium, when it's still, like Lewis said, a seller's market, but it's not as strong as it was a few months ago, where there was 50 people showing up to the open house, everybody's writing offers. Now there's less offers because people are being a little bit more timid. There's a little bit more inventory. They're paying a lot more for the property and the mortgage payment. So they're really, really worried about the little things that they're going to have to come in and do. And so that's when those perfectly done flips and those perfectly done projects are going to sell quickly. And the ones that are more or less, are going to take a little bit longer to sell. And in markets where there's even more inventory, regardless of whether you're perfect or not, that's going to sit on the market a little bit longer. And I have a feeling staging is going to come back pretty soon, unless this trend resumes and we pull another NVIDIA and we keep breaking out. Staging will probably come back. So if you're a staging company, if you're an interior designer, you might really see some great income coming to you over the next year or two. As staging does make a huge difference in selling homes.
All right, I put that, you sent a chart.
Yep. So that is the National Home Price Index. And since we are all traders here, actually you could do, there you go. You could do that, or you could do a candle chart, either way. But what I was trying to illustrate was this dip right here that we all saw. Pretty much right around the beginning of the year, it started to bounce again once we saw that the mortgage rates normalized. The Fed was still increasing
the
rates.
peak of the market, like we said, the peak of the market was June last year.
Yep.
Right when I moved, right when I sold my house. Prices come down a little bit, and people were a little bit scared, and all of a sudden it's like, you know what? No, there's nothing to be scared of.
I still need a place to live.
People always need a place to live. And again, we're going to talk about commercial later. We're going to talk about some of the things that they're having issues. We're having issues. Oops, we lost them. We're having issues with pretty much commercial, office space, people that work from home, et cetera, et cetera, et cetera. But people always need a place where to live. All right. So here's your prices. Your prices are going to ticking up. Now, another thing that I've seen is that people are not moving to primary markets anymore. People are leaving primary markets. Correct. We spoke about it in April, I think it was. People are moving out of primary markets, going to secondary markets, tertiary markets. What's that doing? It's if you can afford a house in California, for example, what's the next best thing? You move to Oregon, you move to Arizona. You can afford a house in South Florida. Where do you go? You go west, you go to the west coast of Florida. You can afford a house in Orlando. You go to Daytona, you go down to Melbourne. You still have your commute. People are moving from those primary, secondary to tertiary markets. Actually, I found, I'll show it in a little bit, the highest increases year to year on properties have been also tertiary on fourth markets. How do you say four markets? Fourth. I have no idea.
My English not so good, man. I don't know.
I don't speak English no more. Okay. So
whatever comes after tertiary team, that's what he means.
Yeah, that's what I mean.
So basically, here we call that the boonies, bro. Because I mean, if you're
the boonies,
that's way out there in the sticks. At least you're in Florida.
Yeah. All right. So pending home sales in May. Now, this is existing home sales. This stuff that just closed. Let's look at pending home sales. This stuff that is going to close in the next couple months. Okay. So every closing we look, it's a minimum 30 days, most likely 45 days. Some of them closing in 60 days. Okay. Where is people moving? Where are the majority of the houses in the country closing at? In the South, Bible Belt. Everybody's moving to the South. Why? Affordability. You cannot keep up prices no more in Pennsylvania. You cannot keep up those prices no more in Massachusetts. You cannot keep up the prices no more in California. So where are people moving? People are moving to where the weather is nicer and homes are more affordable. Okay.
And the insurance rates are through the roof, but that's a different.
That's not allowed. I'm gonna leave that to you for later. I'm gonna leave that for you for later. So pending home sales, month to month, they're coming down a little bit. Remember, people want to be, if this is May, people wanted to start closing in April. People, whoever they were in the market, they try to close now, they try to close in May. They want to be settled down for school for August 1st. For example, here in Georgia, August 1st when school starts. I want to be settled, I want to be moved in, I don't want to see no boxes, by the day school starts. And a lot of people, remember, it's in July, everybody goes away. Okay, so you want to be ready to take care of that, take a couple of weeks or a week away, and you'll be ready when your school starts August 1st. So month to month, the properties are coming down a little bit. It's not too bad. Okay, only 2%. But this is where we're seeing the majority of the transactions happening in the South.
Yep.
Okay, so Georgia, Florida, Texas, Carolinas, Tennessee. Okay.
Midwest is pretty close behind, but it's and they've definitely done well for their ability to maintain prices
Yes.
low. You know, the cost of living in some of these states in the Midwest is just incredibly low.
Yeah, I was seeing somebody send me the other day a duplex in Ohio. 100 grand.
Wow.
Not the best, not the
Yeah.
worst, but I mean, it's a duplex for 100 grand. You can rent it for 850 each door. Needed work. I'm not gonna say no, but it's like, man, I don't see those numbers here. The only thing you can buy in Florida with doors for 100 grand is a car. Really, you know,
Maybe a used car.
maybe a used car.
But yeah, no, you're right. Absolutely right. It's a major price difference. By the way, Ohio is not a terrible market, especially
No.
near Cincinnati. They got some good stats. I've been doing a lot of market research in that area.
Yes, I guess I just have to put boots on the ground there and have a look. But yeah, those numbers. Heard some stuff about Cincinnati, Akron. Numbers make sense in the Midwest, but we'll see. All right, and here's the other part: confidence index. First-time buyers. We're still seeing. Last time we did this update was what, 29%?
Yeah.
So people are still buying, first-time homeowners are still buying homes. People are still affording homes. It's just don't expect to find, a $200,000 house in Miami because you're never gonna find it. Don't expect to find, a $60,000 condo in Florida because you're not gonna find it. All right. So it's if you adjust your
Expectations. Yep.
expectations to your market, you either move to the market you had, or a lot of people do, and just move to a different market. Okay, it's the same thing that we say. We always look for properties to invest on. If you cannot find in this market, you're looking for a needle in a haystack. So you either move to another haystack that has more needles, or a smaller haystack where you can find quicker. Okay, it's simple as that. Cash sales, investors, for the most part, still 25%. The last time we saw it was 24%. So the numbers are basically stable. It's not like everybody and all the banks and all the all you call them, all the syndications, all the syndicators are the one buying homes. It's not true. Okay. Recent offers for you're having 3.3 offers per sell house. Okay, so
That's a major jump from 50, bro.
Yeah, that's what I was gonna say. When
that one is down a lot. That one is down a lot, but
yeah,
that's still.
I sold my house last year and I got what, 17, 18 offers in 3 days.
Yep.
And it was insane. Okay, but still properties are still 31% are being sold above list price. So what does that tell me? We're still in seller's market.
Demand is still higher than
There's
there is
still
supply.
demand. Because remember, people are pricing the homes, okay, compared to the peak of last year. So everybody's scared, like, oh yeah, they went down, but they didn't went down that much. So what people are doing, they're listing the homes very close to the peak last year. And still 31% of them are getting offers and being sold above asking price. So
Which is amazing.
that tells me there's still way demand. Why this not happening? Again, people are not leaving their homes. If you don't have a living situation of a change, why are you going to leave your nice home with a 2.9% mortgage? Where are you going to go with that? It's now you're going to buy the next home for the same price, but it's going to be now 6%. So what happens with your payment? Your payment is pretty much doubled. Why are you going to lose? Why are you going to move your house?
Downsize the house to upsize your payment.
That's right. Unless, it's one of the big D's. The big D's is dead or deployment, or you need to move, or like you say, life happens to you.
Or you come in with all cash, which that does make up a chunk of this, right? The people that are doing this and then saying, hey, you know what? I will buy my smaller condo or whatever I'm downsizing to with all cash because
we see it all the time.
Now they got the cash, they had the equity, right? Because the prices are up.
All the time. All the Northeasterns come from New York and they buy stuff in South Florida for cash. Like it's like, why are you paying that? Because that same house up in the Northeast will be double. So for them, it's like, it's big nothing. I'll pay it.
Yep. If you could sell a condo in New York and buy a 5-bedroom house in South Florida for the same amount of money, why wouldn't you?
Yeah. All right. here we go.
So
US home
it's
prices
not
are
all bad news then, right? Am I reading this
no,
right?
that's what I'm trying to say. There's no bad news. Actually, the bad news is that the mortgages are high. But if the mortgage rates were any lower, then we will have the same situation we had last year. And that will be bringing up even more inflation. So in
I
a
disagree with that
sense,
statement though, bro, because there is some bad news for investors like us that are struggling. We're out here searching for deals. We're thirsty. I'm
because
running out
I
of water
told
here.
you, because you want everything by the beach, and you want 15 minutes away from your house.
Yeah.
I told you. All right. So US home prices increased for the third straight month. Look at the prices. Everywhere is going higher. I'm surprised about Boston. I heard people were leaving Boston. Cleveland, I'm not surprised. A lot of people moving to Ohio. A lot of people moving to Southeast. Same thing with Detroit. Seattle, you can't do anything about it. I mean, people that want to live there, they're going to live there. And want same thing. San Francisco, San Diego, Chicago, Los Angeles. They are going to pay whatever they want to pay. It doesn't matter. People want to live
Now,
there. They're going to
some of
make it.
these were also markets that took it in the chin at the end of 2022.
Yes.
Right. These were on the slowest markets list. I remember seeing some of
Mhm.
these. I don't remember. I think Boston was on there too.
Mhm.
New York. So, this is also relative, right? It's up for the third straight month in a row after taking it in the chin last year, because these were some of the really high markets, right? That really took a beating last year
Yeah, they
with
did.
people exiting. So it's all relative, obviously, but the point that we're trying to make is that there hasn't been the end all be all crash just yet.
Yeah, exactly.
It is definitely market specific, and just like Lewis said, if your market is not within your budget, look elsewhere, because there is action in pretty much all the states in the country, and there is ability to invest all the time, regardless of the market. I've always heard the old timers in real estate say that it's not wait to buy real estate, is buy real estate and wait.
Mhm.
Just buy right and just wait. By the way, team, we are taking requests. If anybody has any
Yeah, that's what I was
specific
looking for right now.
market that you want to look at, throw your market, your city, your whatever in the chat. We're happy to look at it. We have a couple of minutes that we can take a look at some market specific stuff on whatever you guys want to look at. What else you got on the slide, Lou, while they do that?
That's basically it so far. So
All
we're
right.
gonna
So
talk
let's
about
go ahead and look
you.
at a couple markets that I have that a few people sent me
Okay.
beforehand for today.
Take the screen, or you want to send me a
No,
link?
you could drive. You're driving good, bro. If you want to just pull up the Redfin website that we use, or the
Yeah, I found this one too. Hold on. Redfin data. There you go. And you see it? See the screen?
I sees it, yes, sir.
All right. So what we're looking for.
I would just get rid of the years and let's just look at 23. And then let's take a look at, obviously you got to start with Miami, right? So change the region there, or the market, to Miami. There it is. Miami, Florida, not Oklahoma. There you go.
Actually,
Do 12. Yeah, there you go. Do 12
I
months.
put 22 as well.
Yeah. Okay. Perfect.
All right. New listings. You see, if we're following the same trend.
Mm-hmm.
Okay, everything goes great in January, February stays there. We're looking what 12 weeks. Thank you. Okay, perfect. We only have data till April, but I know till then to from April to June. Okay,
Yeah.
so we have less listings following the same trend, where we're still above 600, 700 listings in March to May. Not bad. Slightly less. This includes Fort Lauderdale as well.
Yeah, I believe Miami Metro usually includes Miami and Fort Lauderdale.
Might not be.
You're better off typing it. This thing is huge, bro.
Yeah. Nope. There you go.
Oh, okay.
Hey, exactly the same curve.
Very basically the same thing. Okay, what about days to close? I'm pretty interesting to see what the days to close are.
Days to close. We're still 20 days.
That's still pretty low, right? I mean, days on the
I
market.
mean, if you have a mortgage, you need to at least 30, most likely 45. So that means a lot of stuff is moving up in cash too.
Yep.
20 days median.
That's pretty amazing. That's still doing pretty good. You know, in reality, it is down from the end of last year, right? This is the end of 2022 right here.
Yes. So
2022
he came over this
is
way.
in black. Yep. And then so we are selling closer than the end of the year, which the end of the year is technically slower always.
Yeah, it's always this.
But the rates were also, a little insane back then. So that's pretty interesting.
Yeah, if the rates still the same, I'm sure this is gonna kind of trend up a little bit. Not much again for seasonality.
Let's look at the medium sales price, see if that's dropped anything. Interesting. Look at this.
Look at that.
Higher than June
last
of last year when rates were way lower.
Yes, sir.
That's very, very
way
interesting.
higher.
You're back in Miami, so Miami's still on fire, guys. Miami's still on fire. So if you're looking to move to Miami,
look at the curve. For Lauderdale is even worse.
For a lot of those is Nvidia-ing it out of here. Oh, we've seen a little bit of a drop in West Palm, but
that drop is normal. You know that, right?
Yeah,
that drop is normal. It's right after Memorial Day. Those snowbirds leave. And Palm Beach is very, very controlled by that market, or at least used to be.
Okay, so let's look at Orlando or Davenport if it comes up. I don't know if it'll come up.
Davenport probably won't.
Okay, so Orlando's not quite
Orlando is kind of the same price as last year, but not higher.
They're flat compared to last year, not as strong as
Davenport, Iowa. No, that's not that one. So this is your metro area. So there's no
actually,
increase.
Let's do Lakeland. Let's see if Lakeland comes up.
Lakeland, Florida, yep. So that's your Davenport. Ouch.
Yep. I kind of suspected this was the situation in that area based on what we have going on there personally. So, yep, it's definitely leaked a little bit from we're below the end of the year.
Yeah.
So it's definitely what we're seeing. Let's look at days to close.
30 days.
We're a little higher.
It's a very average.
That's not too bad. That's not too bad. It definitely got worse at the end of the year. And I remember seeing that for sure.
Yeah. Of marketing 2 weeks now. They're taking a long time to sell. Taking way more than 2 weeks to sell.
Yep.
So Lakeland is a slow down market.
Yep. And then that's gonna be the case, and that's why we do this exercise, team, and we do this for our business wherever we're investing. To try to kind of see what's coming up, right? Yeah, we don't always get it right, but we do try to stay informed as much as possible. There you go.
Not here.
Try Port Charlotte or Charlotte County.
No, I saw Cape Coral though. I don't know why they call it metro
What?
area.
Okay, interesting.
Hair prices too.
And this is
Medium
movement.
size price. Starting to pick up. So this is exactly what we saw on that the flip. Because remember, we were thinking about listing here
Mm-hmm.
and we listed down here. The price kind of, took a little while, now back up. So it might
Yep.
just creep up a little.
What about days to close? How's that market doing on days to close?
It's
Pretty much flat,
slow,
same as last summer. Yeah.
slow, but look how quick we was, and all of a sudden, blah. Very seasonal. Again, maybe again, not sure, but could be. We see the 30 days to market average.
Yeah. Let's look at
Yeah.
price drops actually. On those markets that we looked at to see.
7.5%.
But it's come down. Notice there was more. This is the less
The
price.
peak, yeah.
Right. Yeah. So 8% of listings were dropping prices a few months ago, and that's coming down.
Which we saw that
so-
we drop our price.
We dropped our price too.
We drop our price right here. Hey, we got in the contract.
Yeah.
Okay. Let's have a look at the other project. More
It's
price
increasing.
drops.
There's more price
Mhm.
drops, a little bit more. I mean, they were high in the beginning of the year. Now they're normalized and now they're coming back up.
But look, it's the age 56 days of inventory.
Which is
So
about what I have.
yeah,
Yeah. Like we said this was gonna be a two and a half
it's lower. It's
about a
lower.
month, 2.5 month market. Yeah. It's not Miami for sure. It's not Fort Lauderdale. Is none of the above.
And it's selling below listed price.
Slightly below. Yep.
Mhm.
Not last year.
Yeah, slightly below. It's basically a selling price.
Yeah.
Okay.
All right. So a
Right.
couple of the markets that I got were obviously, Nashville. Everybody wants to look at Nashville, but we could look at your neck of the woods as well, because I know you wanted to look at some stuff in ATL.
Yeah, but the thing with the metro, let me see if I can find something else. Okay. Active listings. And that's exactly the situation. No listings. No home sold. So the main situation, median sales price, prices should be holding up. Exactly. Prices are going up because we have no inventory for sale.
Nobody's selling in ATL.
Nobody's selling an ATL in the market anyway. But
Yeah.
yeah, look at this. Compared to last year. Obviously, last year was crazy, but even we're still a little bit above this one where everybody was panicking here.
December, yeah.
Listing median price. So whatever is coming
But
from
that's pretty
market-
terrible, dude, because go back to new listings, because that's really terrible. That's gonna do a number on that market, because this is end of year seasonal slow period.
Yeah.
This is supposed to be the hot month still. It's not supposed to be
Mhm.
dropping. There's supposed to be a lot of movement in this market this time of year. This should be like this right now, like it was
Correct.
last year.
So that's gonna bump the prices.
That's gonna
For
definitely
sure.
make those prices hold quite well, for sure.
Mhm.
Good luck finding deals, home.
That's why I'm going to the west side. Actually, let's have a look at Birmingham. Want to see a couple of things there. Median sales price, we saw it slightly below last year.
Let's look at age of inventory before you take off from here, and then we could go to Birmingham.
50 days.
But it came
Actually,
down.
actually, yeah, I speed up.
Yep.
The transaction speed up.
It's less, it's high, it's slower than it was last year, but nonetheless, it's gotten faster.
8 weeks of supply.
Wow, 8 weeks of supply.
And this is what they told me the other day in Keller. Things are starting to sell really, really close. If you, we had a meeting, a group meeting the last week. Properties that are selling, that are priced correctly, are selling within 4 days. If you don't sell the house in 4 days, meaning that you price the property wrong, it takes 3 weeks to sell for you to have the correction. And so they were telling us about, pricing the property, correctly. So don't go too high, because then it's gonna, you basically need to talk to the homeowners. You wait, you're gonna end up getting a little bit more, but you're gonna lose 3 weeks.
Yeah. And I mean, that's long been the thing always, right? Regardless of what market you're in, price is the first thing people look at, and when they're buying a home. So it does make a big difference. You can overprice in certain markets, but in others you can't. And if you're gonna overprice, you better have a good product, right?
Exactly. All right,
All right,
let's
you
see.
said
What other
Birmingham.
market?
You said Birmingham?
Yes. All right. I want to see Birmingham. Slightly little bit new listings. Slowing down with the curve. Listing. Look at that. We're about to hit the peak. You see this? Tertiary market right there. Everybody gets scared. Boom. So nobody really, I'm not gonna say nobody wants to live in Birmingham, but it's definitely not Miami. It's definitely not New York. So if there's no need to move there, let's pause and figure out what's going on. That's what causes this situation.
But
prices are going.
they're still wanting to be there right now. I mean, it's a
Yeah,
great price.
they figure it out. Hey, things are not, because what's the problem? The problem is that when things crash, the first things that crash are the high ticket homes. Okay, because they drop. The percentage wise is small, but they're so expensive that in number wise is a big number. So that scares people away. The second things that drop are the boonies, where nobody wants to be there, realistically speaking. Okay. So if the boonies drop, the next thing that's going to drop is things close to the boonies. Do we really want to be in Alabama? So it's one of those.
Well, I mean, and you say that because you're from a big city, but Birmingham is one of the bigger cities in Alabama.
Last year. I was there last year. It's a gorgeous town.
It is beautiful. I was actually just it's not in Birmingham, but it's close to Birmingham, looking at a BTR deal. They're selling it's like 60 houses in one package community. And it's very interesting, dude. It's very interesting at the entry price. It's very interesting the profitability of that kind of project. To be able to buy brand new construction homes around here. You can't. It's like between 250 and 260 what they're looking at. It was astonishing to me, man. You could barely buy a condo for that down here. And the returns were pretty nice.
Don't mind my little hearts and things.
Now we know everywhere Lewis has stayed at.
Yeah, because I've been looking in Birmingham. I've been looking in Huntsville. This is another really, really pretty town.
Yes, beautiful market. By the way, this is an awesome
month ago.
Yeah.
Beautiful, and it's not. Again, you have NASA. They build rockets and kinds of stuff. Then they have a whole bunch of factories over here. I believe also Mercedes-Benz is over here, but I'm not sure. I have to find out. But where was that one we were talking about? Remember? No.
I don't know exactly. It was in between Montgomery and Birmingham, but I don't remember which one of these markets it was in.
Gotcha.
I don't remember, to be honest with you, and it'll take me too long to find the OM. I think. But the main point on that was it was just it's a very steady market is what they are up there, right?
Yes.
And then one of the things that we'll get into in a little while is how some of these hyperactive markets sometimes can suffer a little bit more than those steady markets because of new construction deliveries. And that is, you know, that Orlando area, that Davenport area, that Lakeland area. I think that's what's starting to happen there. There's been a few new deliveries there over the last few months that, you know, may be impacting that.
All right. So let's go over, you wanted to talk about insurance.
Yes. What
Bring that up.
one last market that I got asked for that I
Okay.
want to cover, if you don't mind, is Nashville.
Nashville,
So that we don't leave
let's
anybody
have a
hanging,
look.
which
All
we all
right.
know Nashville has been
Guys, and
hot.
if you're in the chat and you want to know what's going on in your town, we're here. We have
Where
info
are
at
you
your
in
fingertips.
the world? Look at that. Nashville's still hot,
Jesus.
baby. Woo!
More than last year. What, from 470 to 490?
It's not incredibly higher, but it's higher for sure. 3.8%. Hey,
3%. 3% year over year. Oh, Jesus. Okay, now we're talking.
but the actual median sales price is a little bit lower. Okay.
Exactly. So that was telling me that people were listing like crazy over here. Stupidly high prices, and they were not coming down.
What about right here?
Wow.
Whew. Wow. That's amazing. In 8.2 days, Nashville is
Can you
still
explain
on
me how a title company can
fire.
close in 8 days?
Nashville is
So
still
that's
on
median. That means
fire.
that half of the closings are done in less than that.
That is amazing, man. Woo.
How
I'm
can they
about to move
close?
to Nashville myself, man.
How can they close in 8 days?
Let's see the age of the inventory or the age of inventory to your right. And then
To my right.
you gotta click the little right area. And then months of inventory
And I'm even gonna
afterwards.
do price drops. Why? Age
So
of
look at the
inventory,
age, it's
50
coming
days.
down severely.
50
Things are
days.
moving quicker and quicker out of Nashville. Okay. All right, let's look at price drops just for kicks. It's probably nothing. It's like no price drops.
Well, they are a little.
There's
I guess
well, this is up 4% of active listings have reduced their price. That's like nothing, bro. All right, and then months of supply so that we can kick it off to the next fun activity.
13 weeks of supply. Jesus. Hot market, huh?
Indeed, yo. All right. So
Right.
that is
What else
essentially
you
what
want?
we got. Go ahead. You got
What
another
else you
one?
wanted to do?
No, I'm done. Those were the ones that I had gotten sent earlier.
This is the other one I was looking at. A lot of people moving there.
Yeah, Huntsville is a nice town, man.
Okay. Median sales price. See, the prices came down, so you can. So if nationwide the median sales price is 396, I mean you're pretty much agreed to what, 20% off, and I'm sure you can buy a really nice house here for 330, 325.
Yeah, absolutely, man. You could buy way nicer than what you could
Very
buy
nicer place, yeah.
in Florida.
Page of inventory. Basically, they're slightly below asking price. All right.
Not bad. Not bad. Great market. Solid market. Good
Mhm.
fundamentals for sure.
A lot of industry there.
Well, you know, to kind of sum up the residential team, what we're seeing is that markets are teeter-tottering. They're still strong in some areas. It's really going to come down to the inventory level in your area, the new construction level in your area, and the new migrations into your area, which are always driven by jobs. So one of the things we always tell you to look at is look at jobs creation, how many new job employment centers are in the area where you want to invest in. And the more of those, the safer you are, the less construction, the safer you are. If you have a ton of new construction going around and less jobs, that's a market that might take a beating a little bit more. We saw right now in the markets that we looked at here in Florida, that Central Florida around Orlando, they're incredibly strong markets, but there's just also an incredible amount of new supply coming online. So prices are going to go down a little bit, whether you're buying, whether you're selling, buying, or renting, because rental prices have come down a little bit in some areas, very little, but they have definitely come down. And some supply constrained markets like Florida, like South Florida, I'm sorry, Fort Lauderdale, Miami, as you saw, things are still pretty strong. ATL, ridiculously strong, as you saw, because there's just really not a whole lot of dirt. Nashville, it's on fire still, because it's, you know, it's all been redone, and it's desirable, and the cost of living there is, you know, it's great. The weather is great. So there's a lot of reasons to be investing in these markets. Use this website to your advantage whenever you are looking for new markets, new investments, new markets to investing. It's very helpful for all single family stuff. I can take the wheel if you want, Lou.
Michael's asking, can we show Tampa and Sarasota? For sure.
Michael, right as soon as the bell is gonna ring, comes in with the Tampa request. Let's go.
Bingo, let's go. Tampa.
We got to link up next time I'm in the area, Michael. I do a lot. I try to do a lot in Pinellas County.
Michael just jumped in. For sure.
I was just in Bradenton looking at some properties. So yeah, I love this market for sure.
Active listings. Way more listings than last year. Pending sales pretty much like last year, slightly below. So you got more listings than pending sales. Home sold is slightly below last year. And let's see the sales price. Prices are below last year still. Slightly below. Now, this is Tampa Metro. We'll think that it's Clearwater, Tampa, and I'm not sure it will be Sarasota. Let's say
the areas around there. No, it doesn't.
Yeah, Sarasota might be because it's on the other side of the.
Yeah, usually Sarasota gets his own MSA. Yeah, oh, look at that! It didn't. We'll finish up with this, and then we could look if anything at Bradenton.
Days to close.
Okay, so definitely increasing the days to close in a very sharp manner. I mean, you know, from 31 to 32 very sharply. I guess that's not that big of a deal.
No, same P. Let me see. I'm not sure.
Let's look at price drops real quick before you get away from Tampa. Yeah, so same P is part of Tampa too.
Yeah, exactly. So what's our price drops? Oh. About 8%. Yeah. So slow down a little bit. So it's not as bad as Lakeland, not as hot as Orlando.
Okay, what about age of inventory and then months of supply? Michael, Tampa's looking good, buddy.
Tampa's looking really good.
Yeah, it's looking good for holding value, not for finding deals. I should clarify
because what I'm
that.
saying is, you can if you have those price drops. I'm sure, because like we said, when people are looking right now, people are looking for stuff that is in pristine condition. So stuff that might need a little bit of work. These are kind of the markets that you need. You know, prices starting to come down. People that have a problem, they want to get rid of the problem for the most part. And this is the markets where you, maybe I can find. If it's too hot, you will not find a deal because people are going to jump on stuff that needs to work no matter what. So remember, you make your money in real estate when you buy at the price that you buy, and so you look always to find a good purchase price. You want a market where it's not necessarily taking a beating, but it's slowed down a little bit so you can snatch something cheap.
Exactly. Cheaper, yeah, not cheap, but cheaper. But yeah, you're absolutely right. You don't want to walk into a market where everybody's leaving. Exactly what Louis just said. And so Tampa's definitely, you know, you're right. And then, you know, one of the things that I have been kind of looking at and seeing is that in some of these markets, this is when MLS comes back, right? I know Everybody out there as a wholesaler is like, oh, off market, off market, off market. In these markets that are still, like Tampa, that are still, they're slowing down just a little bit, but they're still strong. They're still very desirable. You still only have 10 weeks of supply. You can look for those things that are sitting on the market where the age of that inventory is a little older. And if that seller really truly does have some pain points in their life and you can identify them, you can help them take that property off their hands at a reduced price, usually, for sure. It does take a lot more negotiating. Back in the days, I used to be able to do a strategy called 25 to 1, where I'd write 25 offers. That would yield me one deal for sure. These days, it's near like 50 or 60 offers to get one deal, but it beats 2022, where it was 150 offers to get one deal. We're getting better, bro.
You're getting better. Yeah.
The
I was
MLS
looking at-
fishing is back, guys.
I was
MLS
looking at the
fishing is
auctions
back.
the other day, and I was showing somebody the calendar for 2019, and we were having 90 properties a day, 100 properties a day. Now we're lucky to see 6, 7, 10. So it's the same situation. People are going to lose their
Yep.
homes because they have equity, so they rather sell it, cash whatever they can cash, and then figure out what they're going to do. There's no point.
Yep. And Michael says that he did a closing for some family members up in Lakewood Ranch, which I do know the area well. It got a little too saturated last year, and they had to drop the prices a ton, which, yeah, that's
Oh.
that we're seeing in some areas. That area there, Lakewood Ranch. I was just in Venice looking at some projects. The construction going on in that area is insane,
Same.
man. Oh, absolutely. I'll reach out, man. Hit me up on Slack so we can exchange contacts, and we can link up next time I'm in the area. I visit the area pretty often. I was just there last week in Bradenton, looking at a building that I have an LOI out on. Then from there, we came down, we saw some properties in Venice, and it's just incredible the amount of growth and construction that's going on in that area. But that will cause a little bit of oversupply next year. Is it going to be the death of Florida? Absolutely not. That's one of the hottest markets in the entire country. It continues to grow. It's super desirable. That whole, Southwest Florida, really the entire Florida, but that Southwest Florida, Sarasota, Tampa on down this way is just incredibly desirable. And, the builders are doing the best to pump up the market with some inventory. It's been said that there's some areas that are going to get hit pretty hard next year with a lot of oversupply, with a lot of new product coming on market. But by 2026, it corrects itself, and then we're back to no supply. So there will be a flash opportunity to buy, and that's why we tell you guys to just keep out there, keep making offers, buy right. It is not about, I'm going to sit back and wait for the market to crash, because you all know it may not come.
Yeah. All right.
All right, Luke. Let me. We only got a couple minutes left, so I think
take over the screen.
In the interest of time, we'll leave it as is. We'll do a multifamily update another time in the future, so that way we don't run over. We only really have a couple more minutes till Yates comes back. So if anybody has one more market, we get one more market here on the residential side that we can look at. Otherwise, we can take other questions and we can wrap up the recording here. Dun, 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 dun. Who's gonna throw in that last market? And if nobody does it, I got one that I forgot to look at, bro.
I'll do it. What you want? What?
Jacksonville, Florida. I forgot. Jessica had told me to look at this one. Yeah.
Jacksonville was exploding.
You're in county. You're in county. So we'll do a multifamily update sometime next month, team. By the way, next month, we are starting a new schedule. We will be on from 3 to 4 p.m. Same days, second and last Friday of the month. Live right here on the All Access channel. Bring your questions, bring your topics. All right, Jacksonville, new listings. Down a little bit from last year.
Lower than last year. Pending sales.
More or less the same. Not
about the same as last year. Home sold slightly lower. They're listing higher than last year, Bubba. So here, they're selling more than last year, but they're listing for more and they're selling for less. Look at that. So what's telling you that?
That means that they're fishing. They're price
Bubble.
discovering.
Bubble.
Yeah,
Yep,
they're price
They're
discovering.
trying
do-
to shoot for the sky.
Yeah.
Yeah. And still they're very decent days to close.
That is great. Absolutely. I mean, but it's not much different than what we've had to do, right? We have an idea of what's going on. We're active every single day. And even at that, we've overshot some things and had to pull back a little bit, you know, by a few $1,000s. The price drops are not that much. Look at that. That's not that bad.
It's not bad.
That's great. It got a little hairy at the beginning of the year, but
Yeah. It's again, I'm sure things were lagging. They were selling for way above
And-
listing. They came down and they're pretty much the same. So why? Okay. So this. They're listing for way more. Unless there's a whole
390.
bunch of new, there's a whole bunch of new construction just came in.
Yep, 390. And then what are they actually selling for?
360s.
All right, let's go look at over here on this side. You got months of supply. Where are we at?
We're still 11 months of supply, so it's seller's market.
That's still
Oh.
a seller's market by any means. Yeah, let's try that exactly. Because that does the math better than you and I.
So
can.
here, they're not dropping the price. Okay, they're basically selling a listing price.
Yeah, like 97.5% of this. Just about basically.
Just about, but then again, the listing price, it's way higher than the sales price.
Yeah,
So
but
if
this could
it's
be
not
like new
dropping-
listings, like you said, the new construction stuff. So
So,
this
so
could
yeah,
be.
the only thing that I don't know.
There's a lot of new construction
sense.
also in Jacksonville that just came online, so that might be what's skewing. There was actually right in June, there was quite a few
We're
deliveries.
dropping. Okay.
Yeah,
Yeah,
yeah.
that
So
was
that
the only
might be
thing that
why
was why.
they there's so much new inventory that came online. All right, team, you can wrap it up, Louis. Does anybody have any questions? We can go back to the slideshow and close it up.
Slideshow questions. Anybody has questions? Again, remember, stock market is closed on Tuesday, July 4th. The stock market it's open half a day from 9:30 to 1 p.m. on Monday, July 3rd. However, Red Flag trading is going to be closed. We will not be in the Access Pass. I'm sure there will be people on Slack. I'm sure people will be trying to trade. I'm sure we will have conversations. It will be great as always on Slack, but we will not be live on the microphone until Wednesday. All right. Be careful on Monday. If you decide to trade on Monday, it's a very low volume day. Try to make the best out of it, but just be careful. Besides that, let's wrap this one up. If you have questions, if you have any comments, please reach out to us. We are everywhere. We're by email. You can get us on reallestate@reallifetrading.com. You can find us at reallifetrading.com/RE. Let me look for it here. Real estate.
And if you're really, really fast, you could just scan these QR codes and get a hold of us
I'm just gonna
directly.
let me leave them there for a little bit, but here we are, reallifetrading.com/RE. Okay, we are actually this changes is changing next month. Next month we're gonna be live the second and the last Friday of each month, but 3 to 4. Okay. My boy here is gonna be, this you have everything is done. You got a little bit of me. If you have interested in mentorships, we have mentorships coming. I believe mine's gonna be in August, so I'll be publishing soon. Hector, you're doing the hero stuff. We should talk about that.
I got to get some dates over to Emily, but yeah, they'll be starting in August again.
Okay, so we should do the hero stuff. You probably take the mornings, I'll take the evenings. If you have any questions, mentoring, you want to look us to really deep look into something, here's information about mentorship session, etc. If you have missed us, we have in real-life-trading.com/lottery. Every one of our shows is here. So you have a whole playlist. We have talked about Airbnbs, and we talked about Burr. We have talked about insurance. We have talked about, we haven't talked about. We talked about land last time. That was a great show. I love that one. That blew my mind. I didn't know we could do that. The preppers. You call them the
End of the world preppers. Yeah,
end of the
yeah,
world
yeah.
preppers. Here's the list of books that we recommend that you read, that we have read. They are amazing. They're going to point you in the right direction. Again, if you have any questions, if you have any comments, if you want to know anything else, reallifetrain.com/RE. QR codes are here. Email are here. We'll reply. We'll say. We'll be there for you guys. And with this, where's the like and subscribe? If you guys are on YouTube, again, the algorithm works for us. So please like and subscribe, leave a comment. We check our email, we check our comments, we check everything. With this, I guess, happy end of June and bye.
Thanks, everybody. We appreciate you being here. Happy 4th of July. Thanks, Michael. Have a great weekend, everyone. We love y'all.